Stop what you are doing right now, April 6, 2026, 8 p.m. Eastern Time. That is the deadline. That is the moment everything changes or doesn't. Trump said it, Iran ignored it, and the global economy is now holding its breath because what happens at that deadline does not stay in the Middle East. It hits your gas pump, it hits your grocery bill, it hits your mortgage rate, and in this video, I am going to show you exactly why. This is not a war story. This is a game theory problem. And right now, America is losing. Here are three numbers you need to hold in your head. 20. That is the percentage of global oil that moves through the Strait of Hormuz every single day. $120. That is how high Brent crude already spiked when the strait closed on March 4th, and 10 million. That is how many barrels per day have disappeared from global supply as of this week. According to the International Energy Agency, this is the largest supply disruption in the history of the oil market. Larger than the 1973 oil shock, larger than the Iranian Revolution of 1979. The IEA said this crisis is worse than both 1970s oil shocks combined. And yet, Iran just said no, again. Let me give you the short version. February 28th, 2026, the United States and Israel launched joint strikes on Iran. Iran's supreme leader, Ali Khamenei, was killed in the opening salvo. March 4th, Iran closed the Strait of Hormuz. 200 ships stranded on both sides. Oil jumped 30% in 3 weeks. March 10th, Iraq, Kuwait, Saudi Arabia started cutting production because storage filled up with nowhere to export. March 22nd, Trump issued a 48-hour ultimatum. Open the strait or we destroy your power plants. Iran fired missiles at Israel instead. March 23rd, Trump postponed the deadline. March 26th, Trump extended it again, this time to April 6th, 8 p.m. Eastern. Iran's response? Iranian state media called it a retreat out of fear. Iran's conditions for ending the war? War reparations. Sovereignty over the Strait of Hormuz. All American troops leave the region. Complete end to strikes on all fronts. These are not compromise positions. These are maximalist demands. So the question analysts are now asking is, why is Iran not scared? Imagine two cars driving directly at each other, full speed. The first driver to swerve loses. That is the game. Academics call it the chicken game. And right now, Trump is the driver with the most to lose by staying straight. Not because America is weak, but because of the credibility trap. Here is how the trap works. Trump sets a deadline. March 23rd. Iran does not comply. Trump extends to March 26th. Iran does not comply. Trump extends to April 6th. Every extension sends a signal, not just to Tehran, to Beijing, to Moscow, to every government watching how the United States handles a red line that has already been crossed. And here is the deeper problem. The ultimatum is structurally impossible to fulfill. Washington can bomb Iranian assets, but it cannot force shipping insurers to re-enter the market. It cannot guarantee tanker captains will volunteer to sail through a strait still layered with Iranian mines. U.S. officials confirmed to CBS News that at least a dozen Iranian mines are currently deployed in the strait. Analysts warned this week that even a successful strike campaign may leave the strait physically open, but commercially unusable. The strait is not just a geography problem, it is a confidence problem, and confidence cannot be bombed back into existence. The sequence moves like this. Step 1, Iran closes the Strait of Hormuz. 20% of global oil supply effectively gone. 20% of global LNG supply gone. Step 2, commodity traders panic. They price in not just current disruption, but future risk. Goldman Sachs estimated a risk premium of $40 per barrel above pre-conflict levels. Brent crude trades near $103 per barrel as of this recording. Step 3, oil feeds everything, not just your gas tank. Diesel powers trucks. Trucks move food. Food prices follow fuel prices with a 3 to 6 week lag. Step 4, fertilizer. Roughly 50% of global urea and sulfur exports transit the Strait of Hormuz. Urea prices have already jumped from $475 per metric ton to $680 per metric ton. This is the spring planting window for soy and corn in the American Midwest. Disrupted fertilizer during planting season means lower crop yields in late 2026. Step 5, central bank trap. Goldman Sachs economists have already raised their 2026 U.S. recession odds by 5 percentage points to 25%. Oxford Economics modeled a scenario where oil averages $140 per barrel for 2 months. They call it the breaking point for the world economy. That level would push the Eurozone, the UK, and Japan into economic contraction and create what they describe as economic standstill in the United States. Step 6, the Federal Reserve gets trapped. Inflation returns driven by oil, but cutting rates now risks inflaming that inflation further. The Fed cannot fight a supply shock with rate policy. The 10-year bond yield already jumped to 4.46% on March 27th, its highest level since July 2025. 30-year mortgage rates climbed to 6.38%. Step 7, Asia breaks first. China, India, Japan, and South Korea account for 75% of oil exports through the Strait and 59% of LNG exports. Qatar has already declared force majeure on all LNG exports. Pakistan, Bangladesh, and India depend on this supply. The Dallas Fed estimated a single quarter closure of Hormuz would lower global GDP growth by 2.9 percentage points annualized. That is not a regional crisis. That is a coordinated global slowdown. Here's the detail that should stay with you longest. Just 15 minutes. That is the window. A Financial Times investigation found $580 million in bets on falling oil prices were placed in the futures market just 15 minutes before Trump posted his pause announcement on March 23rd. Oil prices fell sharply on that announcement. The trade was perfectly timed. Regulators are now investigating. But the broader point stands. Someone knew or thought they knew. And in markets, that kind of information asymmetry can move faster than the missiles. The war is not just being fought in the skies over Tehran, it is being fought in the futures pits of London and Chicago. Now let me give you 3 scenarios. What happens after April 6th? Scenario 1, the deal scenario. Iran allows partial transit through the Strait. Some oil begins moving again. Markets rally. Oil falls back toward $80. A preliminary agreement is signed with Pakistan as mediator. Talks continue for weeks. Nuclear demands are deferred. For this to happen, Iran needs to feel it has extracted enough domestically to justify de-escalation to its own people. The probability here is low. Iran's counter conditions remain maximalist. Scenario 2, the extended standoff. Trump strikes Iranian power plants on or after April 6th. Iran retaliates against Gulf desalination infrastructure. Saudi Arabia, UAE, Kuwait face water and power crises. The Strait stays closed. Oil moves toward $130 to $140. Global recession risk crosses 40%. According to Moody's scenario modeling, this is the base case. Scenario 3, escalation. U.S. forces attempt to physically reopen the Strait. 1,000 paratroopers from the 82nd Airborne are already staged nearby. Marines from the 31st Marine Expeditionary Unit are in theater. Iran threatens mines across the entire Persian Gulf. It fires on Gulf states. Multiple fronts ignite simultaneously. Oil supply from Kuwait, Iraq, and Saudi Arabia collapses further. The 1987 tanker war took months to stabilize. And that was with a larger U.S. Navy and far simpler Iranian capabilities. Today, Iran uses drone swarms, precision missiles, and naval mines. The risk in scenario 3 is not just economic, it is systemic. So here is where we land. The United States has 2 options, and both of them are bad. Option 1, strike Iran's power plants on April 6th. Iran retaliates across the Gulf. Desalination plants go dark. Gulf states face humanitarian crises. Oil hits $130, $140, possibly $150. The global economy enters contraction. America wins the battle, but pays an economic price that lasts years. Option 2, extend again or back down, and the credibility cost becomes permanent. Every adversary revises their calculation. American red lines are negotiable. American ultimatums have expiry dates. That is the trap, and Iran designed it precisely. By controlling the Strait, Iran does not need to win militarily. It only needs to survive long enough for the economic pain to shift the political calculus in Washington. The head of the IEA said this week the global economy faces a major threat at the gas pump, at the grocery store, at the pharmacy. That is not commentary. That is the structure of the trap. This is an educational analysis based on publicly available information. Some developments are still evolving and not independently verified. This is not financial or political advice. Watch what happens on April 6th. Watch whether the deadline holds. Watch the oil price. Watch the bond market, because the next move changes the game for everyone. Be here for that.